entering the last week of September, and we've got a lot to talk about. Markets are all over the place. We've got Nasdaq's down. We've got shares of Dow overnight a little higher. Let me take a look. Let me show you right now the overnight data so you can look at the futures here. And then we can make heads or tails out of the markets upcoming. So S&P up about 10, Nasdaq down about 15, Dow about 200. So we're a little mixed with tech a little softer. Let's talk about global markets, and then I'll give you support and resistance levels. Now, in terms of the economy, we've had existing home sales yesterday. The report was good. It wasn't bad. Let me just show you the numbers, the expectations versus the actual. 6 million. Look at that. Consensus. We beat consensus. Home sales are sharp. Interest rates are low. And then tomorrow we've got new home sales and jobless claims. This is going to be the biggest day for reports. And we've got Jerome Powell speaking today and tomorrow. In terms of new home sales, jobless claims, we're looking for less than 1 million. Here we go. Here's new home sales, 820,000 to 950,000. If we can hit 1 million, you're going to see home builders really, really rally. And in terms of jobless claims, let me see what we're looking at. Again, 4-week moving average. Anything below this 4-week moving average, we're good. And the consensus is right below. So anything right up the consensus, anything below 900,000, we're good. We're really, really good. So again, we don't want to see we don't want to see jobless claims move higher. We want to see them move lower. So anything below the moving average is kosher. Now, talking about the global markets, let's talk about what we might have missed. I'll do the highlights, and then I want to talk about some support and resistance levels, something I haven't talked about in a while. So world stocks mostly higher as Europe shares advance despite fresh data showing regional economic recovery may be faltering with no central banks giving aid in sight. Surveys of purchasers managers by the IHS Market Kit indication business activity slowed in the region using the euro. That's not good because they can drag down the dollar as well. Signs of strength in manufacturing, I told you that 8 weeks ago, were countered by weakness in service stocks, especially in places where COVID-19 outbreaks are flaring. That's not good because we're seeing some places in Europe and China get their the COVID cases rising. Investors are keeping wary eye on how the COVID-19 pandemic is affecting the outlook in U.S. as well as the federal chairman urged Congress to provide fresh stimulus. The Fed said they're not going to be raising rates till probably another 2.5 years. And even if the economy rises to 2% growth, inflationary growth, they're still not going to do anything. So that's very positive. But again, if central banks and Fed don't decide on something, it's not going to be pretty at all. House of Representatives committee hearing Tuesday, Powell said economy appears to be improving, but some areas appear to be slowing after the expiration of weekly unemployment benefits. Oh, my favorite part, Trump and China. I've been all over this. I know it's a smart political move to be all over China right now, but do we really need it right now? I mean, you don't think the world is stressed out from this COVID-19? He's being very political. I'm going to say that. And China and U.S. have been going at it for a year. We need to this trade war is got to go. But there's a time and place for everything. And again, this is just my opinion. Among concerns for investors are rising tensions between U.S. and China, which could lead to a retaliation against U.S. tech companies. Folks, we don't need that right now. That could be devastating for us. Look at the Russell 2000. It's been choppy for 2 years. You want the same thing for the U.S. market? Tensions flared Tuesday as President Trump, in a very short virtual speech, urged United Nations to hold Beijing accountable for failing to contain the virus that originated in Chinese city of Wuhan and has killed over 200 million Americans and nearly 1 million worldwide. Is that the same virus that he said barely impacted anyone? 200 killed 200 Americans? I'm sorry. I'm all over Trump because of this China. I like what he's doing, but I think he's too much tension with China right now. We don't need it right now till this COVID-19 is behind us. Chinese ambassador rejected all accusations against Beijing. And crude oil, we're still below that $41, $42 that frackers pay in U.S. to work on oil, which means there's going to be pressure on the energy market. Now, I hate to say I told you so. Look at the two. This is on a 1-month basis. Look at the two sectors that are rising: material, industrial. material, industrial. Tech and consumer discretionary are now in third and fourth place. Go back to my video from a month ago. You'll see me saying that basic materials and industrial stocks are going to go higher, and tech and consumer are going to go lower and lower. And don't be shocked to see consumer staples move up there as well, and even potentially utilities if the bond market moves higher and the stock market moves to the 200-day moving average. Now, talking about the stock market, let me give you some support and resistance levels. I haven't done that in a while, I realized. So these are the levels you want to pay attention to. You may want to take a piece of paper, write this down. In terms of the bulls, I'd like to see the SPY move above the 343.30 level and close there for 2 days without hitting the 50-day moving average. Again, it's the 343.50, 343. You know, if you want to be really safe, how about 344? 344 and without hitting this blue line for 2 days. Then I'll get a decent bullish signal. Till then, no soup. On the downside, I wouldn't trade long till we break above the 50-day moving average. In terms of the short side, I would wait till we trade below the 200-day moving average. So I would be very patient and very cautious while we're in this twilight zone, as I like to call it, between the 50-day and the 200-day moving average. The market's not going anywhere fast right now. And remember, 2 months leading to the election, we usually have some congestion and consolidation and not too many up moves, especially in light of what we're seeing with Beijing right now, with the trade war, and with COVID-19. So again, I would wait till we're well above the 50-day moving average, 343.50, 344, 2 days in a row without hitting the blue line, then we're good. Till then, I would stay away from the S&P 500. In terms of the QQQ, let's take a look at the QQQ. Again, we're a little closer, but again, I would want us to see a break above the 280.80 level. If you want to be really safe, go to the 281.5 level. And again, I want to make sure we close at 281 or higher, 280.80, 281 or higher for 2 days in a row without hitting this blue line. If we hit this blue line, no soup. Until we're below the blue line, I would be very cautious. If you have positions, reduce them in half. Something I've been telling you for months. Put the money in ETFs. Something I've been telling you for about 6 weeks to a month. Not good to trade short yet. Not good to trade long. This is a good time to just kind of stay back and relax and stay away from the market till we get a clear signal. The Dow Jones, we're almost at the 200-day line. If you're looking at the Dow Jones versus the DIA, this is the diamond, the spider. Not the spider, the diamond, which is the ETF that trades it. Just add a 0 to my numbers. So we're right now, I would feel comfortable going in around the 28,100 level if we're looking at the Dow Jones. But if you're looking here, it's the 281.50 level. So 28,150, 28,200 on the Dow. And if you're looking at the DIA, then it would be 281.5, 282 with closing without the low of the day hitting the blue line. We want to see us trading completely above the 50-day moving average on the Dow, on the Nasdaq. We don't want to see the low hitting this blue line once we're above it, or the S&P. So I know you're not going to get the lowest price, but at least you'll have some safety, because we can be in a situation where we can be trading between these levels, between the 50-day and the 200-day for quite some time. So I would be very, very, very cautious. The only exception I have is if you see a stock that made a high and now pulled back. In other words, this made a high on the 2nd of September. That's when the S&P made its high. If you see something trading higher, and I showed you a few examples yesterday. Let me show you some examples. And even with that, I would be very cautious right now. But let me show you what I'm talking about. So you see pin interest? It made a higher high. The market made the high on September 2nd here. You can see the dates on the bottom here. But see how it went higher? And it completely shrugged off that low side. That I like. So pins looks good. Roku looks good right now. Higher high than September 2nd. Penn National. You know, I've talked about these stocks quite a bit over the last several months. Penn, Pins, Roku, all making higher high. KBH, Kaufman and Broad. What did I say in the beginning of this video? Home builders. Notice the high, they're making a higher high than September 2nd. So Zillow, love this stock, higher high than September 2nd. NVTA, higher high than September 2nd. So a lot of these stocks look good. Same thing with Leonard Homes. I like Leonard Homes. It's breaking out right now. Toll Brothers breaking out. Home builders are completely shrugging off this downside. So KBH is a good buy. Leonard's a good buy. Toll Brothers is a good buy. Again, look for stocks that didn't make a high on September 2nd, but look at stocks that made highs like 2 days ago. In other words, they completely bucked this downside trend. And if you want to be really, really safe, you want to wait till we're completely above the 50-day moving average on the S&P, on the NASDAQ, and the Dow without the low hitting the blue line over the past few sessions. Now, folks, I've got something for you, something important, all right? It's not every day you hear about a strategy that could double your investment in just 3 weeks. 3 weeks. But for the first time ever, Chuck Hughes, 10 times trading champion, he's revealing the secret behind this 20 years of success without a single down year. Can you imagine 97% accuracy, no losing year over the last 2 decades? He has made $1 million this year alone thanks to his trophy trade system. And the next trade, Chuck says it could give you the potential to pocket thousands of dollars in a matter of days. Thousands of dollars in a matter of days. Are you ready to turn your dreams into reality? Chuck lives next door to Clint Eastwood. He's got a 97% success rate, and he's averaged over $57,000 a month over the last 20 years. You gotta check this out. This is amazing. I am so privileged to have Chuck here with us. Follow this link. Turn your dreams into reality. Click on the link below. Get in on Chuck's next trade. It's already up, I think, 18% as of yesterday. You cannot afford to miss out and have